Good evening, class, and welcome to our class today. Today we'll be talking about a different topic from last week. Let me share my notes so that we can begin the class. Okay. All right. Our class today is accounting for labor. So we are going to be accounting for labor and look at some of the class rules that all of us should imbibe. For example, we are told to put our videos on mute and not to start our audio on mute and not to start the video. I think you have been doing well in this, being the only student in the class. And use the chat buttons for questions. Let's go straight to our topic for today. Accounting for labor. So in our production, we normally say we have direct costs, which we call materials and labor. Now, these are variable costs, material and labor. How do we account for labor, so to speak? At the end of this topic, we shall learn labor costs, and we can see them as direct and indirect labor costs. We're going to know what they are, what they consist. Then we'll also look at remuneration methods. What is remuneration? Remuneration is payment for labor. We're going to see the methods that we use to pay for labor. And we're going to see what labor turnover is. So let's start right away. Now, go to the elements of labor cost. Labor consists of three things make up labor: the basic wages and salary of employees. So when we say wages are people who receive their payment every day. So you can link it with people who are working in maybe a construction site. As soon as they finish working for that day, they pay them for that day. Or sometimes they will be paying them for a week. So these are wages. Then salaries. Salaries are people, payment for people who are being paid either monthly or sometimes they pay them weekly. So when we talk about the basic salary, you know, when you are computing your salary, you get to what they call basic. So that is that. Then we have additional payment for overtime. So we're going to be looking at how do we account for overtime payment or overtime work. How do we pay them? Then we have other payments and bonuses that are on top of your basic and overtime. Sometimes we have, these days, our basic salary is not all that we are being paid. Sometimes they add some allowances like transport allowance, feeding allowance, clothing allowance, all of it now becomes your gross. So all those gross, those things that makes the gross, your basic, your allowances, and perhaps your overtime, all become your gross. So this is what your labor cost consists of. But you find out that employers do not pay So they do not pay everything that is earned by the employer, by the employees to them. So there are certain deductions that must be done before this labor is paid to them. It is deducted at source. One of them is income tax, which we call pay as you earn. Every employee who have the contract for service, they get their pay deducted from source and paid to the government. We also have another deduction that is normally made on salary, which is the contributory pension. So if you are on contributory pension, it's been deducted and given to the PFA. So the remaining one is called your net salary. So that remaining would be your gross, which has included your basic and other bonuses and overtime, less the statutory deduction. Now, labor can be divided into two. We call them direct and indirect labor. Now, what are direct labor? Direct labor are labor that is done directly on the goods and services produced by the entity. So those employees that are directly doing the job, these are the direct laborers. So an example can be seen in a factory. When a factory has production workers, let's say people who are making the bread, actually making the bread, these ones are direct laborers. And so what you pay them is the direct labor costs. Then we also have indirect labor costs. Indirect labor costs are the costs incurred in the production department, but not directly involved in the production of the goods and services. For example, we know of supervisors who are just walking around, they don't do the job, but they supervise. So these supervisors are production workers, they get paid, and theirs is an indirect labor. So the general rule is that direct labor costs are the cost of direct labor employees, and indirect labor costs are the cost of indirect labor employees. However, there are some exceptions to these general rules. So what are these exceptions to these general rules? Take note, when you pay your direct laborers, it should be called direct costs. So those people who are directly doing the job, I'll be using bread as an example. So forgive me if I digress to talking about bread. So those who are producing the bread directly, anything you pay them should be called direct costs. Then the supervisors, anything you pay them should be called indirect costs. But these two exceptions are called the idle time and the cost of overtime premium. So let's look at them now. What is idle time? Idle time is the time when employees are not doing any active work. Yes, but they are paid for just being idle. Remember when I was teaching you relevant costs and I said somebody have spare capacity. So spare capacity is idle time. That time that you have free to do other things or to sit down doing nothing is idle time. Now, direct laborers, people who are directly involved in making the bread or the goods, most times, sometimes too, they have idle times. So since we've said that anything you pay to the people doing the job of production should be called direct costs. What about the idle time where they are not doing anything? What do you call it? The cost of idle time would be a breakdown in production. Let's say the machine that is supposed uh, to bake the bread has some issues. Maybe it's not powering, it's not heating, and they have to wait for somebody to come and fix it. And they wasted 2 hours, 3 hours, 4 hours, and they didn't do anything at that time. You're going to pay them for that time. It's not their fault. So, do we call that non-productive time direct costs? That's the question. Or sometimes you're supposed to start your production by 8 o'clock and perhaps close by 6. By 12, the supplier who is supposed to supply you has not brought the material. Perhaps you are doing it just in time and he has disappointed you now. Maybe for that day, wasted the whole of the day and you didn't do anything. You're going to pay them for that idle time when they are waiting for delivery of the supplier. Or it could be that customers have not given their orders. And so people who are taking their orders are just there doing nothing. No order have been registered by a customer. These are idle time. So now, mind you, direct laborers should be their cost. The cost of what you pay to them should be called direct costs. But now there is an idle time. Idle time cost should not be called direct cost. So that's why we say there are exceptions. So idle time cost that involves the direct workers should be treated as indirect labor hours and cost. So the costing system must be organized in such a way that there should be a way to collect the actual productive time and the time that workers are idle. I think that is why we have supervisors that will record when the production workers are idle and when they are really doing the job. So that they can be classified as direct costs and indirect costs. That's idle time should be indirect. Let's look at the second exception, which is overtime premium. What is overtime premium? Now, overtime means you are supposed to close at a particular time, but your employer said, please, can you extend your time beyond your normal working hours? Now, to motivate you to stay beyond your normal working hours, they are going to pay you something called overtime rates. The overtime rate. So, what is overtime rate? Overtime rate consists of two elements. It consists of the basic wage rate that you normally pay for during normal working hours. It also contains a small premium called overtime. That's why the overtime rate is higher than the normal basic wage rate. So when you are saying overtime, you see that it has a higher figure than the normal time because it contains two elements. It contains the element of basic wage rate or hourly rate and the overtime premium. Why is it being done like that? We'll get to that. Now, let's look at this example. Now, this example says, during 1 week, that week, Mesha works 46 hours. These 46 hours includes 8 hours of overtime working. Our basic rate of pay is 1,000 naira per hour, and overtime is paid at time and a half. Now, look at what they're saying now. When they say overtime is paid at time and a half, it means 1 hour and a half. So, how much are you being paid for 1 hour? It means for the basic, you have 1,000 naira as the basic hour payment. And they said and a half. So you can divide it into two. 100% of the 1,000 naira is the basic wage rate. Now, plus the half is 50%. So you say 150%. So you see 150%. So you see now that the overtime rate consists of two elements: the basic 1,000 naira rate plus the 50% premium, which is 500. Now, this is how we are going to calculate her weekly costs, knowing fully well that premium, overtime premium, the premium part is kept separate, not the whole overtime, is the premium. What do we mean by premium? If you are buying shares and they say this is 1 naira per share, nominal share, and they are selling it for 150 naira, it means that your premium is 50 naira. That excess over the nominal is your premium. So the excess over the basic rate is your overtime premium. So that excess is kept separate from the basic. So now look at how we are going to calculate it now. You know, there are two ways we can calculate this thing. So let me show you the first way. Let me get my calculator here. Okay, so this is the first way. We know that she worked 46 hours. Total is 46 hours. So we say 46 hours multiplied by 1,000 naira basic should give me 46. Now you have dealt with the basic. Now, the reason why you are doing it this way because the basic are called direct labor. Then the premium, which is the indirect labor, should be kept separate. So out of these 46 hours, 8 hours was for overtime. So you say 8 hours multiplied by just the premium. So times 1,000, 50% of it, 50% of it, everything will give you 4,000. So when you add 4,000 to 46,000, you have 50,000. So you mean that the 46,000 is the direct cost, while the 4,000 is the indirect. That is the proper way to do it. You know, some people will do it this other way, which is not the proper way, and you will get 50,000. So these things could come in an exam, that this question, they can ask you in theory or objective, which of them is the direct cost, which is the indirect. Someone will say that, okay, because she worked 46 hours and 8 hours was overtime. Some will say, okay, let's remove the 8 hours and we'll get 38 hours of normal work. And they will go ahead and calculate 38 hours times 1,000. That will give me 38,000. And they will say the remaining 8 hours times 1,000 times 150%. And they will get 12,000. So this is what they will say, this is the overtime rate. Yes, this 12,000 is what the person made for overtime. Now, this is not the premium. This includes the basic and the overtime premium. Everything is in this 12,000. So when you add it to 38,000, it becomes 50,000. So 38,000 is what she made during the normal working time, and 12,000 is what she made outside the working hours. But the question here is, which one is direct cost, which is indirect cost? All the working period is used for the production. So the whole 46 hours is directly used on the product. And so you have to charge it at the normal basic pay of 1,000 naira to get your direct cost. And so the remaining, the 8 hours inclusive in the 46 hours, you have to find just the premium and the target as indirect cost. So you see, effort is being made to differentiate direct cost and indirect. And so overtime premium is indirect. So you see here that in cost system, it is usual to separate the labor cost at the base rate, at the basic rate per hour from the cost of the overtime premium. This is because overtime premium costs are usually treated as indirect labor costs and should be measured separately. So let's go to recording labor costs. How do we record labor costs? In a cost accounting system, there must be a system for relating the cost of labor to the work that is done. There are various ways in which labor might be recorded, but the main methods are the use of payroll records. You know, when you are being paid your salary, they prepare a payroll. Then there is what they call time sheets or similar time records. So time sheets has to do with you clocking in, register the time you start work, and you register the time you end work. So they use it to know the number of hours that you spend working. Now, payrolls can be used to identify employees as direct labor or indirect labor employees and charge the direct labor cost of each employee to the department or cost center where he or she is employed. So just take note of that. Timesheets can be used within a cost center. So now, when you are using payroll, you are differentiating cost centers. So you can identify direct labor in cost center A, direct labor in cost center B, indirect labor in cost center A, indirect labor in cost center B. But timesheets now can be used within just a cost center to record the time for each employee on different tasks. For example, you are doing task A. Now, task A is supposed to give you a different wage rate because you are doing, just one individual can be doing work in different departments. And so you use your timesheets to record how many hours you spend doing task 1. Then you move to task 2. How many hours is spent on task 2? You move to task 3. How many hours you spend on task 3? You check all of these because it's possible that these tasks are of different wage rates. So you need to know how many hours you spend on each of that time, on each of the tasks. Okay? Timesheets are needed if employees spend more time on more than one cost item. So you see, if you are just doing only one thing, then there is no need for timesheets. But if you are doing more than one cost item, timesheets are needed so that their labor cost has to be allocated to the different cost items. Now look at example. A manufacturing center might produce 2 products, product A and product B. And one direct laborer might spend time working on product A and product B. Now, the timesheets can be used to record the time spent on each product so that the labor cost can be allocated to each product according to the number of time that that laborer spent on each of the products. So you see, timesheets are also important. How do we account for labor costs? How do we account for labor costs? Within a cost accounting system, indirect and direct labor costs are recorded and charged to the cost centers appropriately and to the cost units. So direct, indirect, and direct labor costs are recorded to the cost centers and to the cost units. The record of the record of labor costs are included within the double entry cost accounting system. So let us see some of them here. Look at the payroll accounting entries. Let's look at it. Employers must make deductions from the gross pay earned by employees and pay amounts withheld to various third parties. Said that at the outset, you get your gross pay and you deduct the necessary statutory deductions. Now, the double entry that is necessary to reflect this can be achieved by two journals. In the first journal, you recognize the payroll expenses with the other side of the entry recognized as salaries, a series of creditors representing the parties to whom the payment should be made. The second records the payment of various balances to the respective creditors. So let's see the example here. Now look at an example of a payroll accounting. The following information is a summary of a single month's payroll of a business that is employing 25 people. Now look at their gross pay. We are not told what this gross pay include. So, but if you are involved in preparing salaries in your company, you know that gross pay will start from basic, then you will now see your transport, you now see your allowances, all the allowances lump up together gives you your basic. Now you see the deductions, because we said you are not being paid this basic. Nobody pays you this basic. So there must be deduction. What are the deductions here? It's approved that for somebody, yeah, thank God you are doing tax. So when you get to personal income tax, you will see all of this. Your payee is deducted, then the pension contribution is deducted, supposed to be 8% of the employee is deducted. The National Housing Fund, is it 2.5% that is deducted? Get this. Then if you have a life assurance, the premium you paid should be deducted because they are allowable expenses. Then if you are involved in the NHIS scheme, you deduct all of this. There is something that is not even here. Okay, yes, you don't deduct that, but it's called a consolidated relief allowance. I think it has been taken care of. So when you deduct all of these, and you get, so when you add this to this, to this, to this, and to this, so let's add them together. 284,978 plus 328,125 plus 109,375 plus 250,000 plus 218,750. When you add them together, you're having 1,191,228. That is your total deduction So when you deduct it from your gross pay, which is 4,625,000, so you're having a net pay of 3,433,722. So this is your payroll. This is what the staff gets as a payroll summary. Now, how do you account for it in your accounting book? So this your gross pay will be, because this is what is supposed to be paid to you. This is what to be supposed to be paid to you. So this gross pay is supposed to be an expense head. So you are debiting that. You are debiting the employee's gross salary. And debiting his gross salary. Then all these deductions are taken as creditors also. So you are crediting them out. You are crediting all of this. So the final one is supposed to be the net pay. So I don't know how it came out like this. The final one is supposed to be this net pay here. It's supposed to be here, not this figure, because all of these forms this figure. All of these form this figure here. So this employees here is supposed to be this net pay. So in fact, it is the net pay that should be here. Then what do you do next? All these items that you have credited, when you start paying them, you now start debiting them to the expenses, to the expense head. So you are paying them off, you are debiting them. You are paying them off, you are debiting them. So when you now pay off your employees, which is a net pay, everything is being debited with cash or bank. But in this case, yeah, you are setting up the expenses. So you are saying that yes, you debit your, sometimes it is called salary control account. You can say your salary control account is this, then you debit all of these. All of these are, and they will be entering into your record. Maybe if you're using QuickBooks or other accounting software, you'll be seeing them as credits because you are owing them, they are liabilities. When you start settling these liabilities, you see them, you start going to the debit side, show that you have started settling them. Then when it comes to this place, they call employees, which is supposed to be your net salary. So as you are settling the net salary, you are using cash or bank to settle all of them. So you can see that you can even write one check. You can write one check for everything and give the bank instruction, pay to this account, the account for tax, account for pension, account for NHIF. If it is a refund of your life insurance premium, they are paying you to refund here on submission of your premium payment. This NIH, you are paying that. Then the staff salary. Everything could come in different instructions, but one check covering everything. So you see two journals have been used. If you are using software, it also performs all of this together. Now let's look at remuneration methods. What are the remuneration methods? Now we have calculating the cost of labor. How do we calculate the cost of labor? The labor cost of a product, service, job, or activity is calculated as the cost of paying the employees to do the work. Labor costs are allocated between different jobs or activities on the basis of the time spent working on each job or activity. So the time you spend on activity A is the basis for paying you for that a fixed direct labor and a fixed salary each month. So you can see while I was teaching you throughput accounting, we said that labor cost is not a variable cost. It's a fixed cost because many employees are really paid fixed salary. Their costs are allocated to the department they work in and to the activities they perform on a time basis. Now, if, for example, an employee spends half of his time on one type of activity and half of his time on another activity, then his cost of labor will be divided 50-50 between the two activities. Some laborers are paid by the hour, and some others are paid by the number of job they do, which is called piecework. The cost of labor of these employees can be measured and charged to the units they work and produce. So you see, sometimes when you are doing your management accounting, you'll be seeing labor, you'll be seeing labor cost per hour. So when you see labor is paid as so and so per hour, that means they are using hourly rates, time rates. Then when you see that your labor cost is said labor is paid at maybe so and so per unit, now you see that they are using piecework. So you should always look at the type of labor you are giving to know whether you're using hourly rates or piecework rates. Now let's look at the time-based system. Now when employees rather are paid an hourly rate, their basic pay either per week or month is calculated as follows. The number of hours you work, because it's a time-based, the number of hours you work multiplied by the rate per 1 hour. So when we are looking at overhead absorption rates, when we are doing activity-based costing and absorption costing, we came across overhead absorption rates, and we said it is based on labor hours alone. This is an example. So you see that you look at the number of hours that each department work or each person works, and you look at how much is the rate of absorption. So that rate of absorption is per labor hour. This is an example of time-based system. So you see the basic pay, you'll have to look for the number of hours worked by that person multiplied by the rate per hour. Production record should reflect time spent by these employees on specific jobs or batches of production so that the labor cost for this work can be measured accurately. So you see, people will have to be signing time sheets. So time-based system, we have a time sheet. So you see, you want to go to this product or this department to work, you sign a time sheet. You sign in, you sign out, or you clock in, or you clock out. Now, any overtime premium for overtime working, as I said before, is treated as indirect costs. So you see, in the time-based system, you usually have overtime. So you see, anything that has to do with time measure. Now, when you say overtime, it belongs to this system. And we said overtime is treated, the premium is treated as an indirect labor cost. Okay, now let's look at the piecework system. Wow, I didn't know that you have not been in. You have been out. You have been absent. You have not been in the class. Wow, that's serious. Let me see. Okay, we'll be seeing you whether you are out or in. I'll take the time-based system again. I said the time-based system is when workers are paid according to the number of hours they work. So we said that it is calculated as your basic pay will be your number of hours worked multiplied by your rate of pay per hour. And we said example of that is the overhead absorption, whereby you look at direct labor hours and use your overhead absorption rate multiplied by the direct labor hours for that unit to get what should be paid to them. So we see that the overtime, when you hear overtime, you are talking about time-based system. And so any overtime should be treated in the way we explained. The basic part is treated as direct, and the overtime premium is treated as indirect labor costs. Now, the next one is piecework system. In piecework system, you are looking at the number of units produced. So the basic pay is the number of units you produce multiplied by the rate paid per unit produced. Look at example of piecework. A worker in a textile company sews buttons on shirts. Now she is paid 20 naira for each shirt that she completes. During 1 week, she completes 800 shirts. Now we are not told how many hours she spent in the work. We are not interested in the number of hours. We are interested in the number of units. So her pay would be, since we have arranged that we are going to pay her 20 naira for each shirt, and she has done 800 shirts, it's going to be 800 times 20 naira, which is 16,000. Now look at what we call differential piecework system. Now, differential piecework system encourage employees to increase the number of units they produce by paying higher rates per unit when more units are produced. Now you see there is a problem when you are using piece rates and when you're also doing time rates. You see, if you tell somebody that I'll pay you 20 naira per unit. Now, anybody can produce in 1 hour, the person can produce maybe 10 units very fast in 1 hour. And somebody could stretch it and spend the whole day producing that 10 units, and they get the same thing. So you see, it causes some people to be lazy. And now, when you tell me that you're going to pay me per hour, say you're going to pay me 20 naira per hour. So what I will do is this. I will rather spend the whole day working and perhaps be doing it slowly and I just do 10 units the whole day. And somebody, and I will get paid more for doing 10 units the whole day because I've been working for the whole day, maybe for 6 hours. Then somebody can just do that 10 units in 2 hours, and you pay him for 2 hours. It is the same number of units, but you see, because he has done it shorter and this one has spent the whole day, there is a problem. Now look at differential piecework system. You are encouraging people to increase the number of productivity, and you tell them that I'm going to pay you a higher rate when you have achieved a higher unit of production. So it is quite common for employees involved in piecework schemes to be paid a guaranteed minimum wage so that their earnings do not suffer too much when production levels are low because of circumstances beyond their control. Look at the example. One employee is told that he will be paid the following rates. If you produce between zero, that is, if you don't produce anything, up till you produce 100 units, I will give you 150 naira per unit. So that means that if he produces 90, he gets paid 90 times 150. Now he says, as soon as you give me I apologize for that break in transmission. So sorry. Let me share my notes again. So I was explaining, hold on, let me observe when you are in the class. So I was explaining that if this person is earning a graduated rate, we call this one graduated rate, based on number of units you produce. And the company has guaranteed a minimum wage of 30,000 naira per week. We said this is appropriate because there may be times that that he or she will get lower production once again. I'm sorry for the network issues here. So
Hi, good evening, Mr. Kende. Kindly hold on for the MI lecturer. I guess his network is fluctuating.
I'm so sorry for the naughty thing happening here. Sorry. Let's try and finish this thing before the network disconnects me again. So you see that the total here that she got is 36,500 based on the graduated units that she was producing or he was producing. If the employer had earned, let's say, if this was 29,500, now under the arrangement, they would have paid the person 30,000 as the minimum. But because the person has worked and earned 36,500, that is what will be paid to the person. So let's go to the next one. We have what they call incentive schemes. Incentive scheme, employees are offered an incentive or bonus for improving their productivity or for achieving a certain production target during a period. Now, the purpose of this incentive scheme is to achieve greater productivity so that it will either increase total production output with the same number of employees. That means the same number of employees that was producing 200, if you can increase it to 300 with with that same number of people, then you have increased productivity. Or you achieve the same total output but working fewer hours. You say, okay, if you spend the whole day before doing 200, spend the whole day doing 300, you have increased productivity. Or instead of spending the whole day doing 200, spend like 2/3 of the day doing that 200. So you have spent fewer hours. That means you have increased productivity. If you spend 2/3 of the day doing 200, I used to spend the whole day. The remaining 1/3 can be put into another productivity. Some of the benefits of productivity improvement are given to the employees in the form of a bonus. This should give them an incentive to achieve the productivity improvement. So incentive scheme could be based on an individual's performance or the performance of a group. Now let's look at an example. A manufacturing company produces 1,000 units of a product each week. Now this requires 900 direct labor hours. And the direct labor employees are paid 1,200 naira per hour. The company introduces an incentive scheme in which it will pay a bonus of 5% of the basic rate per hour worked if productivity can be improved by 10%. What do they mean by if productivity can be improved by 10%? And either it means that employees can make 10% more units using the 900 hours, or they are going to produce the normal 1,000 units but using 10% fewer hours. Now, the company wishes to know how the bonus scheme will affect the company and perhaps will affect the employees. So the company wants to know how it's going to affect the company. So let's see how it's going to affect the company. Now, look at the current scheme. This current scheme says that number of hours is 900. That's good. Now, if you have paid them 900 hours, that's 900 hours. Yes, 900 hours. And you are paying them 1,200 naira. So 900 hours times 1,200 naira per hour will give you this figure. Let's see, 900 hours multiplied by 1,200 naira per hour. will give you 1,080,000 naira for the whole week. Now, if you divide it by the number of units for the week, which is 1,000, it means that the cost for one unit will be 1,080. Now, in the first scheme, they are asking you that if you can produce 900, if they can produce, okay, let me look at the first scheme again. The first scheme is to produce 10% more in 900 hours. What it means is that you are still going to produce your 900, you're still going to spend your 900 hours, but you are going to produce 10% more, and they are going to give you a 5% bonus. What is the 5% bonus? It means that if they are paying you 1,200 before, they are paying you 1,200 before, they will now multiply it by 1.05. 1.05 means 100% plus 5% bonus, which is 1,260. So that is how they are going to pay you if you can achieve that increased productivity. So if they are paying you that and you are giving them 900 hours, this is what they are going to spend: 1,134,000 amount naira in a week. Now, if you divide it by the number of units you produce, so because you are producing 10% more, 10% more than 1,000 is 1.1. So that 0.1 is 10%. So that means you are producing 1,100 units. When you divide it, you are being paid the cost of the product will now be 1,031 naira per unit. So the scheme 2, they say that they will pay you, you will do your 1,000 units, but instead of spending 900 hours, you are spending 10% less. So what does it mean to spend 10% less than 900 hours? It means 1 minus 0.1. 0.1. It means out of your 100%, you're spending 90%. So 0.9 will give you 810. So everything here is 810 naira, 810 hours in the week. And they say they are going to pay you a bonus of 5%, which we know as 1,260. So we're going to multiply this by 1,260. It means that you are spending 1,020,600. Remember, you have just reduced the number of time. The same number of units still stand, divided by 1,000. You see that they are spending 1,021 naira per unit. So which one of them will give them a reduced cost? Is scheme number 2. So the company would prefer that the employees achieve the same 1,000 units, but with a lesser time. So you see, the company will be looking at reduced costs, and we'll be telling them, please, I want you to spend 90% of your time doing this 1,000 units, because it will give them a reduced cost. So look at where the company is looking at cost. But look at what the employees will be looking at. Wow, which one of them will give me higher bonus? So you see, look at what they're supposed to be paying, but it has increased from here to here. Weekly payment. In this place, you see they are discouraged from doing it at a lower time because they are not being paid up to this. So you see the problem of timing, of using timepiece, time rate. Now, by doing it at a fewer amount of time, they are supposed to be paid this, but they are paid lesser. So the employee who want to do this, spend the same amount of 900 hours, but do more units. Now look at labor turnover. What is labor turnover? Labor turnover occurs when employees leave their job and they need to be replaced. So the number of people leaving the job and being replaced every year brings the labor turnover. So how do we calculate labor turnover? So you find the number of people that are leaving a place each year and they are being replaced, and find the average number of employee positions in the year. It means that if there are 10 positions in the year, so it means there must be like 10 staff in a year. If 2 people left or 3 people left and they are being replaced, all you need to do is 2 or that 3 divided by the number of staff times 100 give you the labor turnover rate. So a company employs 4,800 employees. During the past 12 months, 660 employees left and they had to be replaced. So the labor turnover rate is 660 divided by 4,800 multiplied by 1,000 gives you 13.75% is the labor turnover rate. And the same thing here too. The company employed 2,800 people at the beginning of the year. During the year, 420 people left and 450 were recruited. There were 2,830 employees at the end of the year. So look at what we're going to do. The average number of employees is going to be how many people that were at the beginning plus how many people at the end. You add them, divide by 2. That's the average. Then the number of people who left is not the number of people who were recruited. So the number of people who left is what we are using to divide by the average. So you see we have 14,900. What could be the cost of labor turnover? Labor turnover is when employees leave one company to go and work for another. It could be costly for an employer because he must have trained this staff, equip him, and now he has going. The training has gone, everything has gone, and it's going to be costly. So when employers leave, their experience is lost. So some people are experienced in the job, and when they leave with their experience. New employees taking their place may be less experienced, and so there will be less efficiency in the job until they know how to do the job. So when people leave the job to go to another place and you have to recruit, you see that efficiency is reduced. That's why companies will tell you some years of experience, like say 5 years experience, because they know that when people leave the job and another person comes to take its place, that efficiency is reduced. So they want to maintain the same efficiency by saying that this is the standard of experience that you should have. Now, new employees might make more mistakes, and this will result in additional cost of correcting the faulty work. So when you make mistakes, you spend more money to correct the mistake so that you send out a good job to your clients. So you see, labor turnover rate is not good for a company. new employees might have to be trained. You see, sometimes when they employ people, they'll say, okay, they'll train them. But some employers prefer people who are already trained so that they will just give them little training. So that training they are giving is an additional cost to the employer. It could have the labor turnover rate, if it is high, could have an adverse effect on the morale and efficiency of the employees who remain in the job. So they don't know what to expect. It will dampen their morale. Every three months, they keep seeing new people. Every three months, they keep seeing new people to dampen their morale. It could even cause them to leave. Why are these people leaving? What is making them to leave? So they might leave, having an adverse effect on the company. So far so good. We have seen how we can classify production labor either as direct or indirect labor. We've seen that direct labor has to do with laborers doing the job, actual production of the job, of the goods and services, while indirect has to do with those who are not directly involved in the production of goods and services. They may be supervisory role, they may be admin staff, all of that. We've seen that there are two exceptions to how we classify direct labor. We saw it in idle time and in overtime premium. We said idle time could be caused because of machine breakdown, waiting for deliveries to come. These are the frontline workers folding their arms, doing nothing. We are paying them direct cost, but that idle time should be taken note specially to be charged as indirect costs. And we said also another circumstance that could be an exception is overtime premium. When they work overtime, yes, all the time spent in working should be calculated and the base rate paid. But the time you say this is over and above the normal time, you add the premium to that time alone. That premium you are adding is treated as indirect. We've seen the different remuneration schemes. We see the hourly rate, the hourly scheme, whereby the number of hours you work multiplied by the rate per hour is used. We saw the piecework, where the number of units you produce multiplied by the rate per unit. We see incentive scheme where you are paying graduated rates according to how many units you produce and above. We saw the accounting payroll costs, how you account for your labor, how it is being debited and credited, all those other creditors that you are taking the liabilities from the employee and keeping it in the credit side. When you pay them off, they enter the debit side of the account. We saw labor turnover, and we saw the adverse effect that labor turnover can have on both the company, both the employees working there. And you know, if a company is known for a high turnover of labor, then people will not want to work for that company. And the same vein is that if an individual is known to change job frequently, highly volatile in his job, changing jobs frequently, the person stands the chance of not being employed. I don't know if you have any question in the whole of the class today. I want to believe that I cannot see chats here. That means everything is well understood. So, but in case you have any problem, any challenges, or any question, feel free to either ask in the group or ask me privately. I'll be glad to provide answers for you. Once again, I want to apologize for the network problem that you have in your end and I have in my end. Sorry for that. These are the challenges of teaching online. Okay, so I want to take it that there is no question. I want you to go over the notes again and let's talk later outside this lecture hall. Good night.